Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So the new week is ready to start, and let's take a look at the euro currency, try to understand what is going on, and to find some possibility for trading, create the trading plan as usual. Well, in fact, the high time frames analysis of the monthly time frame and weekly time frame carry also a lot of interesting moments that could shed some light on a bit longer perspective, on the long-term perspective on the euro currency. Well, and I think that you could find there's a lot of interesting, so visit our forum, read the thread of the weekly research on euro currency. Now you see the link on this page on your screens. And since this is the daily video, we will proceed only with the final part of this analysis, only with the daily time frame and on the intraday charts. On the daily time frame, now we have the perfect and completed setup for the Jod Napoli directional bread butter trade, bread butter buy. Once we thought that probably market could start it from this area, on Friday we said that's probably possible, and market even has made an attempt to continue to start move higher with this fast return back. That was weekly pivot support 1, daily oversold 3, it's support of this from this low to this high. So we had some reasons to think that upward action could start, but market has failed and continue move lower. And take a look, guys, again 50% support. So again and again, that's just unbelievable that euro currency really likes the 50% levels, and the retracement right down has reached the 50% support area from the whole thrust to the upside. Also take a look that this has happened on the third close below the 3x3, so at least theoretically market has no days in reserve to start move to the upside, because by Jod Napoli framework the bread butter trade should start within the 1 to 3 closes below the 3x3. So if market should reach significant support area within the 3 days below the 3x3. So we have first day, second and third. So market in fact either should start move to the upside or just disrespect this level and continue lower. But that possibility, the second possibility, is not very probable, because you can see market stands at oversold. From another point of view, we know that the target of the bread butter trade is the 618 resistance of the whole move to the downside. That's around 132.94 area. But as I said, from another point of view, if you will take a look at the weekly time frame, you will see that in fact this action is the significant and perfect looking bearish engulfing pattern. Also, if you will take the close look at this, it reminds the 3 black crows candlestick pattern. It's quite rare pattern, and here it doesn't look perfect, since you can see that second candle has 2 extended lower shadow, but still this is 3 consecutive bearish candles that open on the high, almost on the high, close at the low. Okay, and that reminds the 3 black crows. This is really rare and strong bearish signal. And I have some suspicions that probably market could not quite reach the 618 resistance. Well, it could. I do not want to tell that it will not happen, and market definitely will not reach it. It could, but the probability in the current environment not as strong as the simple and common bread butter trade, because retracement to the 618 area with the huge engulfing pattern seems a bit extended. You could object to me that market now at oversold and the strong support, and oversold assumes that retracement could be deeper. And in fact, this is not bad. The thrust and momentum to the upside, well, and you're probably right, but from the probability point of view, it makes sense to keep in mind the 50% resistance that stands around 132.50, 132.55 area. It's around this area. And when market will approach it, keep an eye on this level. Maybe it makes sense to take the profit here, at least partially, when the market will reach it. That's the minimum target of the double repo, of the bread and butter. Market could reach it, but keep an eye on this level, because this is really extremely bearish action on the euro currency, and really I have some suspicions that market could show not quite total move by the bread and butter. Maybe it could stop at the 50%. Besides, we know that euro currency likes the 50% levels. Well, now let's see what we will have on the intraday charts. On the 4-hour time frame, guys, I do not see anything interesting, so I think that the one hour chart will be our major working chart. What we see here, first of all, we have, let me just make some more extended chart. So we have bullish divergence with the MACD right at significant support area and daily reversal. We have this perfect ABCD pattern that has been completed on Friday. You can see the legs of this pattern are very symmetrical, very harmonic. Well, market hit this ABCD target, and take a look, market has formed the bullish engulfing pattern. So when we're dealing with the bread and butter trade, the major problem, the major task is to estimate from what level market could start the upward action. So once we said that this could be here, but when the market starts move higher, it has failed at the retracement, take out of these lows. But here, market in fact has no choice, because that is already the third day when the market has hit the next support area. So what we could get here? As usual, here we have two different possibilities for entry. First possibility is an aggressive way to take the position, and it based on this engulfing pattern and this ABCD pattern. So by this aggressive way, you should look for entering right somewhere in this area with the stop placing below these lows, and your entry point will be based on this engulfing pattern and the completing point of the ABCD. But take a look that here some kind of the small 1, 2, 3, 4, 5, 6, 7, 8 bars, some small double repo buy pattern is possible. So market could show some slightly small lower than this one. Thus you will have to place stop a bit lower than this pattern. Well, maybe even you will have to place the stop somewhere around 130.85, 58 area. Why? Because the harmonic swing on the euro currency equals approximately the 40 pips. It means that euro currency, if it makes the move more than the 40 pips, it's not just the noise and not just the occasional move. That move has some foundation. That's why until the 40 pips distance will be reached, market could somehow fluctuate around this low. That's why this way to enter we call as aggressive, because it has some significant probability of loss. But instead of that, it will promise you the perfect entry point. Well, that is the way how you could deal with the current situation. The conservative approach and conservative attempt to enter is to wait when the trend will shift to the bullish side, market start move to the upside, and take the position under retracement. That will be the conservative tactics. Well, what to choose, that is a bit personal and depend on your current view on the market, your assessment of the current situation. You also could combine both of these methods. You could, for instance, take the small position here and add more. The major part of your position on the market will start bounce to the upside. Now speaking about the targets, we said that the target will be around 132.95 area. It's right here. And take a look how it could happen. Here could appear the reverse head and shoulders pattern. So market could show the first bounce to this swing high, then turn to the retracement. That will be the possibility for entry with the conservative tactics. Then we could get some mirror looking ABCD pattern to the upside, since the target of this pattern will be precisely at the 132.95. And the neckline, take a look, stands at the 50% resistance around 132.85. That's why it's the worthy level to look for. That will be also significant level. So that's been said, unfortunately we do not have the clear reversal patterns just yet here, but still we have some leads that we could stick with and try to take the long position with the current setup of the bread and butter. Well, that's in fact what I will be looking in the beginning of the next week. And still I think that maybe it makes sense to take some small position with this area if you would prefer to trade conservatively on this setup. So let's see how it will turn. This is really a very interesting and promising setup now on the daily euro currency, and I hope that we will done well with it. We will definitely track the situation in our video updates. So let's see how it will turn on the market in the next week.